Hey everybody, hope everyone is doing well and had a good day. And in this video, I'm going to review the Emini 5-minute chart for Monday, July 28th, 2025. Just quickly, a couple of things before we get to the 5-minute. The market has been in a strong bull trend, strong bull breakout, high 3, strong signal bar, strong entry bar, 4-bar micro channel, pullback, second leg up. Look where today is opening. There's a leg 2 measured move right around the open of the day. And we're late in a bull trend. We're getting a breakout with a micro gap. This could be an exhaustive late leg that leads to a pullback, not necessarily a reversal, but we are late in the trend. If we zoom out, we're many bars into the bull trend. And if we look at the Globex chart, here's the 15-minute chart for the context going into the day. So here's the information we have. Tight trading range, maybe it's a triangle with a bull breakout that failed, reversal down, strong bear breakout, small pullback trending behavior, very strong momentum for the bears going into the day. So for the 5-minute today, and I have yesterday's high. When I say yesterday, on a Monday, if I say yesterday, I'm talking about Friday. We can see Friday's high in blue. The market failed to break out above Friday's high. Let me just change this to the .D chart. So here's the daily chart context. Here's the 5-minute. The day opened. We're in a trading range phase at this point. As we go into the day, from Friday, spike in channel, the channel evolved into a trading range. 78 broke below 47, a major higher low. So at this point, the market is either in a trading range or a bear trend, which means if we test the highs, if we go to yesterday's high, Friday's high, there are probably sellers above, and there's probably support somewhere down here at these lows. So trading range bar on the open, probably sellers above and buyers below. We know it's a trading range, and we're getting a trading range bar in the trading range. We're also near the middle or upper third of the range, so around here, probably better to only look to sell if you're trading at all. Bears had a 3-bar micro channel, but not a very strong breakout. Doji bar 1, inside bar 2, another doji bar on 3. It's enough selling that there's probably sellers above. In other words, bar 3 is a bad stop order buy, forcing you to buy in the middle of a trading range, and it is a 3-bar micro channel. Most 3-bar micro channels get a second leg, so there's probably sellers above for some kind of a second leg. And that all happened on bar 4. Bar 4 rallied, fairly deep pullback, and we got the second leg down on 4. But now bar 4 is a low one short with a big signal bar toward the middle or lower third of this trading range. So probably buyers below bar 4. Same with 5 inside bar. It's a bad stop order sell. A bad stop order sell is a good limit order buy. Probably buyers below 5. Traders buying below 5 are probably using a wide stop, because if you put a stop below 78, it's probably a skunk stop. Because like I said, this is probably the bottom of a trading range. If you buy here, you have to be ready to buy more lower and scale in, not to put your stop here and sell where there's probably buyers below. 6 triggered the bad stop order sell, limit order buy below 5, reversed up. Now 6 is a second entry long. We tried to reverse above bar 3, pulled back, and we're reversing up again on bar 6. But bar 6 forcing you to take a stop order buy in the middle or upper third of a trading range. So not ideal for buying unless you're swing trading and getting a reward at least twice the size of your risk. Good entry bar, 6 and 7, strong reversal and follow through. Second leg up, likely. More follow through. on bar 8. Bar 8, you can call it a double top with bar 1 and bar 8, but bar 8 is obviously a bad stop order signal bar, and it's a 3-bar micro channel, probably buyers below 8, second leg up likely. And that happened on bar 9, so the bulls got a brief pullback below 8 and a second leg up to a new high on bar 9. But now we're at the top of a trading range, and as strong as this rally may look, we already have at least 2 legs up, 1 pullback, 2. Other traders might count it 1, 2, 3 legs up, and obviously lots of resistance up here. This might be a channel line, so we're trying to break out above a channel. We know the market is probably in a trading range at this point, so buy low, sell high, and the market is high. We're far above the EMA. We're testing a resistance line, the channel line for the bulls, so probably better to be looking to exit longs here, but aggressive to go short. But bar 10, bear reversal bar closing near its low, second entry short, tried to reverse below 8, pulled back, reverse again on 10. Now we have a second entry short, double top 1 and 10, nested, so more reasonable stop order, sell below bar 10, and a strong entry bar for the bears. Now the problem with bar 11 went too far, too fast. It's a trading range, so traders are buying low, selling high, and scalping. And the bears who sold below bar 10 got more than 1R on bar 11. They may have gotten 2R, close to 2R. And we're back to the middle of the range. So this is profit-taking area, probably buyers in this area, but bars 10 and 11, reversal and follow-through, strong enough for the bears that there's probably sellers above and a second leg down is likely. The problem here, it's big up, big down, big confusion. This can lead to more trading range behavior because both sides need a second leg. The bulls are expecting a second leg up after this rally. We're testing support. So there's probably buyers down here looking for a second leg up, but then the reversal and follow through trapped traders above. So if the bulls do get a second leg, the upside might be limited because now there's sellers above, maybe at the low of bar 10, the breakout point, somewhere up here in the range, there's probably resistance. So reversal back up on 12, but 12 is an inside bar testing that breakout point, probably sellers at the bar 10 low. And again, big up, big down, big up, big confusion, lots of overlap, and trend bars that are not really breaking out of much. So traders are fading breakouts. So 12, more of a sell to close bar, but very tight range. Another inside bar, II, but we already know the market is in a trading range. This is simply a contracting triangle on a smaller time frame. If traders are fading breakouts and it's a tight trading range, then it's a limit order market, so not ideal for stop order traders, which means the stop order sell below 13 probably is not all that good. And you can see we triggered the stop below 13 and reversed up. Same with bar 14. Stop order traders, really not ideal conditions for them. There's probably sellers above 14, although maybe not directly above 14. It's a decent bull signal bar. Bears probably would prefer to not only sell higher in the range, but sell above a bear bar like 13. 15 testing higher in the range, but again testing resistance, and this might be a complex pullback after the bear breakout. So the bears got a breakout, pullback, low 1, pullback, maybe a low 2 is setting up. The bulls are hoping they're getting their second leg up, but they've already had 2 attempts up. We haven't tested the high close yet. Well, the upside might be limited. Another inside bar, 16, tight trading range continuing. Big up, big down. The bulls had a couple of attempts up. The bears looking for a low 2 and trend resumption back down. By that, I mean the bear breakout will probably get a second leg. We'll probably test the low of bar 11. And that happened quickly on 17. Bear breakout, 17, a couple of legs down. But For the bulls, really not much to buy, at least right here. Limit order bulls will probably buy lower, maybe here, where this trap occurred, below bar 5, and maybe at the current low of the day, bar 3. There is support lower, but right here, probably not ideal for buying. So the bears got their second leg. Now we're back to the middle of the range, probably profit taking in this area. Also, we're at the low of bar 11, another profit taking target. So we may go sideways here, but aggressive to buy. The bulls don't have much to buy here. 18, not a very strong stop order buy, probably sellers above. Now we have a 5-bar micro channel going down with magnets below. We have a bad stop order signal on bar 80 on Friday that led to a swing up that never got retested. We're probably going to test that price. And this is basically a low 2. It's kind of implied. It's on the smaller time frames, but bear breakout, 1 reversal attempt, 1 resumption attempt, 2nd reversal attempt, and then maybe a 2nd resumption attempt to sell the close 20, low 2, implied low 2. Tight trading range below the EMA. The market's in breakout mode. So probably, if you're trading, at this point, probably better to wait for the breakout. Traders who are trading, you have limit order traders buying below bars, selling above bars, and scalping. And traders who are betting on the breakout, if they're entering on stop orders, they're probably looking for at least 2R on any trade, because you cannot take a stop order scalp here in this kind of context. If you're entering on stops, you need to be swing trading, but this is a very tight range, probably not ideal for much of anything. Maybe the bears get one more leg down, 1, 2, 3, and we test lower in the range. We test that magnet below, but the opposite argument is also just as legitimate. You have a rally that still has not had a test of the highs, so this still may need a second leg up, and this may simply be a big high 2 double bottom, and it's nested. So breakout mode here. 22, big bear bar outside down. The problem with 22 is a huge bar relative to all the bars to the left, and it's far below the moving average. Plus, might be an expanding triangle. We have a bear channel line 55, 78, 22. So the market's testing support. We're low in the trading range. And again, it's a huge bar, far below the EMA. Big bars usually pull back. And for traders, for bears to be selling this far below the EMA, this is not the kind of price and time control that they want to see. This is a trading range. This is a very tight trading range and a big breakout bar. 22, it's a bar that I've heard Brad call it an emotional bar. It's one of those bars that maybe you're not paying close attention and the market's quiet, and then all of a sudden you get this huge bar 22 and you feel like you need to sell the market very quickly and get short and capture this bear breakout. But it's a tricky bar, because when you get these huge bars in this kind of context, well, first of all, this is not sustained momentum. This is a tight trading range with a bear breakout and possibly leg 3 down in an expanding triangle. If you think about selling, big bar, so big risk, you're selling far below the moving average in a trading range context where traders are buying low and selling high. So as far as selling down here, it's really not ideal. It'll probably get a second leg, but we'll probably have to pull back first. And then a strong reversal bar 23. Good context for the bulls. Possibly the bottom of an expanding triangle. The bull bar is closing on its high. And we have gaps open, and in a trading range, gaps usually close. So here's a breakout point. Bar 20 or bar 19 low. There's also another open gap up here, the 15 low. Market broke out on 17. We tested it but didn't quite get there. So there are magnets above. Follow through buying for the bulls, smaller bar, but the market didn't pull back very much relative to bar 23. So traders who wanted to buy maybe a pullback in the buy zone of 23 never got the chance. So reversal and follow through for the bulls, second leg up, likely. Big down, big up, bulls need a second leg, bears need a second leg. But since this is the most recent information, 23, 24 probably need a second leg up first before the bears get their second leg. If this is leg 3, we could test the start of this leg down on 22. 3-bar micro channel, probably buyers below, and second leg up, likely. 4-bar micro channel, bar 26, weak sell signal bar. After a 4-bar micro channel, probably buyers below. The buyers may not come in until below bar 25, but probably buyers below here for a second leg up. 27, 28, 29, the bulls got their second leg. We did hesitate at this breakout point, and it looks like we're testing the higher breakout point, but I suspect there's resistance up here. 30, bear bar closing on its low. If you're buying here, well, you have 2 legs up and you're back to resistance in a trading range, and then you had a bear bar closing on its low, 30. So probably better to exit below 30 if you're long, and okay to sell below 30. But tight channel up for the bulls, so might be better for the bears to enter on a second entry short, a second reversal. 3-bar micro channel, but 2 pushes, 30, 31, pull back, and then 32. We're testing support, and you have the maybe not quite a 50% pullback, but this rally still may need a second leg. Like I said, the odds that this reverses down, not very likely. More likely the bears need a second entry short, which means first we get a trendline break, which we got here, then a retest of the highs, and then maybe you look to sell. 33, strong bull bar. Big up, big down, big up, big confusion. 33, buying 33 after 3 consecutive bear bars, and you're relatively high in the trading range. Probably not ideal, but as far as selling above 33, also not ideal. 33 looks like it needs its own second leg. And then strong follow through, so reversal follow through, 33, 34. Maybe better to look for a second entry short, but probably sellers at the 30 high at the top of that bull leg. So maybe 1 pullback, 2. Bears broke the trend line. Now we're getting a retest. You can see sellers above there. So 35, not a great signal bar, but the context is okay for selling. You have this big bear breakout that still may need a second leg down. Now we have a 2-legged correction. The bulls had a 2-legged move, and we found sellers at the high of the first leg. 36, a bad stop order buy. So this doesn't look great for the bears, 35, 36, but it's also not very strong for the bulls either. Probably sellers above 36. 3-bar micro channel, better context than 32 on this 3-bar micro channel, because now we have a second entry short. So first entry below 30, second entry below 35. 3-bar micro channel, this might be a sell to close. And then there's a tick gap, 4-bar micro channel, might be sell to close. Bears are looking for this to be a double top, break below the neckline, 33 low, fall for a measured move, and test these lows. So a couple magnets below for the bears. And for the bulls, they want the opposite. They want a double bottom here. So for this to reverse back up, get a double bottom, bull flag, bull breakout, high 1, high 2, and then rally for a measure move up and test the highs of the range. Low 1 short, 39. Really nothing for the bulls to buy for a stop order. If the bulls are looking for a double bottom bull flag here, well, this might be a bear channel. Market is creating lower highs and lower lows. And where's the stop order signal bar for the bulls? It doesn't exist. So If you're waiting to buy, just keep waiting to buy. But if there's really not a great reason to buy, then that usually means there's a reason to sell or to hold short. Bear breakout 40. Bears getting the breakout below the double top, below the neckline, 33 low. Lower prices likely. And follow through, so probably sellers above and on the close of 41. Sell the close 42. 43, outside up, but likely minor reversal, testing breakout point. Like I said, the 33 low, that's the breakout point. So 43 might be a sell to close bar, but 43 might need its own small second leg up. Low 2 short on 44 for the bears. Stop order sell below 44 for a second leg down. 45 might be the second leg the bulls get. Like I said, a small second leg after 43. So 1, pause, and then 45, 2. The bulls got their minimum. We tested the high close of 43. So 45 might be a sell to close bar, similar to maybe 20. This is better context. This was more in a tight trading range. This is more after a bear breakout with price control and time control with magnets below. So second leg down likely. And now this is a low 2 or a low 3, 45 on a smaller time frame. It's more clear. And then a big breakout 46, but similar to 22. The problem with these big bars, in a trading range context, we're getting a lot of two-sided trading, and then you suddenly get this huge bar down to support, forcing you to sell far below the EMA with big risk. And what's the potential reward? Obviously, the market is reacting to this bear channel line as support. So the downside here might be limited with your risk fairly big, very big relative to your potential reward. So 46 might be a profit-taking bar if you're a bear. Aggressive to buy, but more likely we pause or reverse up here, then continue down. The success rate of breaking below bear channel lines is about 25%, generally speaking. So low 1 short 47, but probably buyers below. But again, that's more, to me, the buyers are bears taking profits and aggressive bulls buying for scalps. So 46, breakout bar, but getting bad follow through, and it's clearly a late leg down, so we may have to correct for a couple of legs sideways to up here. And again, here's a breakout point, 41. Breakout points are closing, so we may get a deeper pullback up to the 41 low. 49, strong bull bar, but 3 or 4 bar tight trading range. So probably second leg up likely, but to buy the close not ideal. Maybe buyers in the buy zone or below 49. Bad follow through, and then 50. So breakout, pause, small second leg testing the breakout point. This is it's another low 3 on a smaller time frame. 1, 2, pause, 3 pushes testing resistance, second leg down. The bears will probably get a second leg down, and we're testing the breakout point. So 51, probably better area to look to sell, but we did just get a 4 bar bull micro channel, so the bulls may need a second leg up first. 52, strong outside down, but testing the middle of this trading range, 47 to 52. Like I said, 4 bar micro channel for the bulls. There might be support below, so 52. The downside might be limited. Smaller follow through bar, again testing near support. We have the bear channel line. We have the low 1 short that failed, so probably more buyers in this area. 54, strong follow through bar. Bears getting their second leg, 1 pullback, 2, but this is occurring in a late leg in the bigger picture. And to be selling here is to do a low probability thing. If you're betting on the bear breakout of a bear channel line, like I said, about 25% of the time, you get the breakout into a stronger trend. More often, the market reverses within 5 bars and tests the trend line. So maybe the trend line is something like this, way up here. 3 bar micro channel, it's strong, but the context really is not great for the bears. and more follow through selling, but now finally breaking below the channel line the way I have it drawn. So probably will reverse up within 5 bars. And this is possibly an exhaustive bear breakout. As strong as it looks, it's a micro channel. We have micro gaps, but those micro gaps are possibly just more of a sign of that exhaustion in a late leg. And with all the two-sided trading that we've had today, it seems more likely that the nature of the day, the trading range nature, will continue. And rather than break out into a strong trend, especially with the daily chart context, we've been in a strong bull trend. For this to break into a strong bear trend is unlikely. 57, bull reversal bar. And it's one of those bars that if you're short for any reason, you probably just want to exit above 57. And that's one of my default exits that I learned from Al Brooks. If you're far below the EMA in this case, and you're getting consecutive sell climaxes, especially breaking below a channel line, and you get a bull bar closing near its high, this could be a climactic reversal, and you don't necessarily need a good-looking reversal pattern to reverse this back up. So even though it's a 5 or 6 bar micro channel down, 57 is enough to cause bears to take profits and aggressive bulls to buy. So 57, probably a default exit. Like I said, the reversal or the breakout of this channel should fail within about 5 bars, and then we could come up and test the trend line. That's generally the expectation. Low 1 below 58, but bad context, probably buyers below. Tight trading range, and 60 now a low 2 short for the bears. But again, bad context. It looks like the bears are holding below the channel line, so maybe support becomes resistance, but we need to see more evidence. We need to see a strong breakout, and even better if we get to a new low below 56. But it looks like the tight trading range is continuing. And the more bars that get added to this pullback, the more the probability shifts to 50-50 rather than in favor of the bears. So the more bars that get added, we get to 15 or 20 bars sideways to up, then the probability of a bear breakout and the probability of a bull breakout become about even. This might be a low 3, 66, stop order sell below 66, testing a breakout point. It's a reasonable sell, but the context is still aggressive if you're selling. And your entry bar is fairly weak, but there's probably sellers above 67. Bears maybe getting a second leg down, but also testing support. Maybe it's a small second leg relative to the size of this breakout. And then it's a low 1, low 2, low 3. But possible double bottom with 60, and then 69. Another decent bull bar. And at this point, we've had enough bars sideways that some bulls will buy above 69. And you can swing trade that because it's a lower probability trade. Your risk is small. Maybe your risk to below 68. But you could make 1.5 or 2R and get a test of that trend line. But bad follow through, tight trading range continues. Bad stop order sell below 71, probably buyers below. For 3 bar micro channel, probably buyers below for the bulls. Outside down, but in a trading range, and the bulls probably will get a second leg up. And that's the second leg for the bulls. So we're still in a tight trading range. We're in breakout mode. And then we finally get the bull breakout 75. Probably go at least a little bit higher. There's also a breakout point below bar 50 and 51. And that will also act as a magnet. So breakout and follow through, 3, 4 bar micro channel for the bulls, second leg up, likely. And more follow through buying for the bulls, but probably there are sellers above 52. This is likely resistance area, so the upside from here might be limited. 78 breaking above, now the resistance becomes support. So if we pull back on 79, the high of 52, which should have been resistance, may now be support. And we didn't quite get there, but we pulled back and stayed above that bar 52 high. but the day ended up closing, it looks like above its midpoint. And we can see that on the daily chart. So overall for the day, a lot of the day you could say was in a bear channel, but a lot of the day was spent going sideways, trading range through here, trading range through here, tight trading range in here. And eventually we closed above the midpoint. So for internal bar strength, IBS, the bulls actually controlled the day. All right, that's going to be it for today's review. Thanks everybody for watching and listening, and I hope everyone has a great night.